Good morning, everyone. It is 10 o'clock, and I think we can then get started. There shouldn't be any disturbances as people enter because I think they're just going to be able to come into the meeting. All right. Welcome to our webinar today on the 29th of April. It is 10 o'clock, and we're just going to get started. We'll be talking about mastering business finances today, and what you as an entrepreneur need to know in terms of managing your finances. We will be going through a practical guide to financial success for your small business. In terms of our agenda today, we've gone through the opening, and welcome to all of you who've attended, and thank you very much for joining us this morning. We'll be talking about the reality of business finances and what it looks like realistically in the environment in South Africa. We will then be touching on the pillars of financial success and what you need to know there. We will then go through the business finance best practices. After that, we will be doing a Q&A and going through your questions. You are more than welcome to, if you do have a question at any point in time, type your question into the chat and we will then be able to come back to it. If we're able to answer it in real time, we'll do that. But certainly before we close off today, we will answer your question. We will then be joined by our colleagues from Zero, and they will be doing their own presentation. And after that, we will close the session. Introduction to PSTM. We are a accounting business that has been running for 15 years now. And our mission is to help businesses be proactive and not reactive in their financial management. In terms of our team, our directors is myself. That's myself on the right there. I am a registered chartered accountant, and I'm a registered auditor with IRBA as well. I do have over 20 years of experience within the accounting profession. My partner on the left, Dinyuko, who will be presenting later on, I'll be handing over to her, has 20 years experience. She is a CA herself, as well as a registered auditor, and she does also hold a higher diploma in tax law. Okay, so why do we focus on SMMEs? I think this is a very good question, a question that we get asked all the time because there are plenty of opportunities, within many, many different sectors. However, we've chosen as one of our focuses to work with SMMEs, and these are some of the reasons why. If you look at South Africa's GDP, which is approximately 381 billion rand, this was as at 2023, SMMEs contribute 30 to 40% of South Africa's GDP. Now, this is quite a significant number if you can attribute it to one sort of industry. And yes, SMMEs are spread across various industries, but it is quite a significant number. Then when you look at the landscape in South Africa, we understand that we do have an unemployment issue. However, 60% of the employees in South Africa, as recorded, even within the informal space, are employed within the SMME space. So when you're looking at the revenue contribution in South Africa, it's about 40%, but we do employ 60% of the employees in the country. In terms of economic impact, you cannot really grow a country, you cannot grow an economy without looking at your SMMEs. They are vital for local economic development. You must, in your policies, in your laws, etc., ensure that you're looking at SMMEs and what they are doing. And then for growth potential, most businesses will start off as SMMEs. We're obviously not talking about, where you have a branch of an international company where they come and they open up a branch in South Africa. We're talking about a business that you guys have gone and registered. You've got an idea. You start going out there looking for clients, and then that's how you have then a business established. It is a key driver for economic expansion, and so it is important that we always keep SMMEs top of mind. Okay, so now we've got a poll. It will be launched now. And if I can request that you please vote, what we want to know from you is, what are your financial struggles in your business? And we do have some options, and if you can just vote for us. Is the poll appearing? I'm only seeing one vote. Does everybody see the poll? Okay, the responses have started coming in. Okay. So looking at the results, it's not everyone who's voted, but looking at the results, our topmost issue or challenge, rather, in small businesses is cash flow and debt management. And of course, cash flow being very important. And then we've got at tied second is securing finance as well as financial reporting and compliance. Okay. So I'm glad nobody said other, because I would then want to know what other means. And so we will certainly be covering how to address your cash flow and debt management issues. We will be talking about financing. We will be talking about the other ones that have not been selected, but we will certainly also be talking about financial reporting and compliance. Okay. So when you look at SMMEs and the reality that we are all facing out there, I think it's a very, very challenging space. We've certainly got a lot of years of experience working with SMMEs. Looking at the environment, and what we've seen is that you've got the Banking Association talking about how SMMEs issues largely have to do with unviable business proposals. So earlier we were talking about securing financing. And so Banking Association, which represents all the banks, is saying that the business proposals that are submitted are simply just not viable. They also say that there's lack of financial management knowledge and discipline, and seeking the wrong type of funding. So we're putting those applications in, but the banks are then saying, we can't help you because what you have submitted is, we can't really help you with what you have submitted to us. All right. And then there is also, if you look on the right side, they're saying that access to finance remains a definite challenge, particularly for startups, which are associated with the high cost of servicing and volatility, and for smaller businesses and smaller loan sizes where demand is greatest. So we spoke about cash flow and the management thereof. And obviously, once you start looking at loan financing, you've got to make sure that there's enough room in your cash flow to be able to service the cost of actually obtaining that loan. This is, again, the Banking Association of South Africa. And the Deputy Minister at the DTI is saying that government is aware that SMMEs find it very difficult to access different forms of finance, including debt. So this is something that even at government level, at policy level, they are aware, and I think they do try. They've got the various development finance institutes where we can submit applications. Timelines remain an issue, and it doesn't really serve the businesses, but it is something that they are consistently working on. If you look at SME South Africa here on the bottom, they're saying that adoption of technology is made difficult by the skills gap relating to effectively using these tools, as well as the high cost of some tools. Technology is here to stay, we all agree. However, it seems that within the SMME space, most founders, etc., obviously are wearing a lot of hats, and so tech always takes a back seat, and it's not really something that, if you're not passionate about it, you're not really going to be keeping yourself up to date, and that then becomes a challenge within your business if you're not able to keep up with your competitors. We've also got a quote from Deloitte that speaks to regulations and the cost burden relating to that. So they're saying that the regulatory burden and the cost of tax compliance remain a significant challenge for SMEs, as they often do not have the necessary staff, resources, and skills to navigate the complex tax rules to comply with all their tax obligations timeously and fully. I think we did have some people who said that financial reporting and compliance is one of the most significant challenges in their business. Interestingly, nobody chose the tax obligations, so I'm very happy to see that everybody's on top of their SARS obligations, because Mr. Kieswetter is definitely out to increase his collections. Next slide. When you look at SMMEs, the reality of it is that most businesses fail because of lack of financial planning. There's mismanagement, and certainly financial mismanagement would fall under the bigger bucket of mismanagement. There are compliance challenges. There are inadequate pricing strategies where you are just not meeting the demands of your market that you've defined. Financial literacy remains a challenge. There's limited access to funding, and there's limited access to professional support. And most of these really speak to our budgeting, is that, you go into business, you realize I actually didn't budget for my IT person when I was setting my pricing. I didn't budget for the office that I now need to go and get because clients want to meet me in my office. I didn't budget for the assistant that I now need to go and hire. And so these are true realities, and these are true challenges that most of us have really gone through. And unfortunately, it's a lot of trial and error. And what we're trying to do today is to make sure that we limit that trial and error, because I think once you are resolute and you've decided that I'm starting a business and I'm going to see this through, we definitely want you to succeed. Right, so of all of those problems, at least we can take a deep breath and acknowledge that, every single financial struggle has got a solution. We will go through some of these solutions, and we cannot go through all of them, I think, because, some of them we need to sort of have a one-on-one where we are saying, okay, take us through what your challenges are. We can hear what you are saying, and we can also hear what you are not saying, given the experience that we have, and we're able to then advise accordingly. We're going to go through then the 3 pillars of financial success. So in terms of our approach and our methodology, it is important for every single business owner to understand all 3 of these pillars and have a very good grasp of what they talk about. Number 1 is to understand your numbers. That is in terms of financial reporting. Financial reporting does not have to be complicated. We all know about the listed companies. They have very, very stringent rules and regulations that they have to comply with. Luckily for us at small business level, depending on your public interest score as defined by the Companies Act, we don't really have the such stringent laws and regulations to comply by, but we still have to comply. All right, then we'll talk about managing your cash flow and creditors, which speaks to your liquidity and budgeting, making sure that you stay on top of your cash flow. And then we'll talk about staying compliant, which talks about your tax, your governance, your internal controls. Any laws and regulations, this is where they will come in if they have not been touched on in your understanding of your numbers. Okay, when we talking about understanding your numbers, we then start with financial reporting. And there's various elements that we then can look at in terms of your financial reporting for your business. We can look at the next slide. Right, the first one that we start off with is the income statement. The most recent technical term for this is the statement of profit and loss, but income statement remains what most people really refer to, especially in our space, in the SMME space, because it's a phrase that we all understand. What you look at in your income statement is your profitability as well as your expenses. You want to know how much money did I actually make from my customers, right? That is a very important figure. You must know that figure. From there, you want to know the expenses related to generating that revenue. How much are they? And what you then want to see is to see a positive number. When you say revenue minus expenses, you don't want it to be a negative number, not in our space. Of course, if you are starting a capital intensive business and you've gotten funding to the tune of millions, then you start seeing a negative number there. But I think for the purposes of us here on this webinar, we want to always see a positive number, because what it's saying is that I've gone out there, I've secured clients, I've secured 10 clients, they're all paying me 10 Rand. That's 100 Rand. The costs related to me getting this entire 100 Rand from my clients is now sitting at 75 Rand, and therefore my profit is 25 Rand. Great stuff. We're happy for you. It's important for us to know all of these, okay? It's also important for you to know, when I get one more client, what does that do to my expenses? To your income, you already know I'm going to make 10 Rand more. But now, is it the same? Is it going to be proportionate? Is it going to be another 7 Rand 50 in terms of the expenses? Or are you going to start realizing economies of scale, where at some point then each client is now costing you an extra 5 Rand, which is great, because then, you know, what you then know is that I just need to focus on my marketing machine if I've sorted out the servicing of my clients. Right, so that is the profit figure. You must know your profit figure, and we're always measuring the profit definitely on an annual basis, but you may want to also measure it into smaller pockets of time, maybe per month, or maybe you've got a seasonal business, so you want to know in the summer, this is my profit, and therefore I want to know that in the winter, when I don't have as many clients, I want to be able to be covering my costs, which, you know, for example, may include yourself. You do not want to then not be paid in those times when your business is seasonally not having a lot of clients. The second element that we look at in your reporting, your financial statements, is your balance sheet. Your balance sheet is going to tell us, myself as your accountant, as well as you, the financial health of your business. And the way we measure this is to say, how much equity do you have in the business, or how much equity has this business built up since you have started it? Initially, you're going to put in that 100 Rand to buy those shares once you've registered it with CIPC. However, then you're going to put in 20,000 Rand, or however much it is, to get the business started, for it to be able to operate. And that's all you want to put into it. From there, the business needs to then sustain itself. So you've now made a profit of 25, like I said in the earlier example. that 25 is going to go into your equity. Now, the formula to calculate what is the equity and what is that value that your business has created for you is to look at the assets that are in the business minus the liabilities. The assets, as you can see on the picture, it's your cash, it's your laptops if you have. If you've sold or provided services on credit, that's also an asset. If you've got any items of inventory, if you're selling physical inventory, that's your asset. If you've got laptops, you've got furniture, all of those are your assets that you're going to put in your balance sheet that you probably, if you're starting out, would have bought with that 20,000 Rand that you've put into the business. Then what we do is we minus or subtract the liabilities that you have. So if you've gone and you've purchased a car on credit for the business, for example, I'm going to see your loan on your liabilities. I'm going to see your suppliers, your SARS debt, for example, is going to be in the liabilities section. I'm going to see any creditors that you may have. Anybody that you owe money to is going to be in that section. Now, again, what we want to see is a positive number. We want your liabilities to be less than your assets because that means that actually this business is growing and it is then increasing your own financial net worth. Yes, if I can call it that. So the moment we have a negative equity here, when we do this calculation, what it's telling us is that you've bitten off more than you can chew in terms of liabilities. You've got liabilities that exceed your assets. And so it's not going to be anytime soon that you can expect this business to start giving you a return in the form of a dividend, or if you've provided a loan to this business, it's not going to be able to pay you back that loan because there are laws and there are regulations in terms of even paying a shareholder any money of any sort, even if it's a loan. We have to follow the regulations that are provided for by the Companies Act. So we always want to see a positive amount. Now, if the amount is negative, I know, for example, you can be in the property space, for example, you can have negative equity, but that negative equity, if you understand your business well, you know that it is going to turn around. If you've bought properties well, you've done your analysis well, then you know that this is going to turn around in the next 3-4 years. When I start doing my market valuations, my properties would have then significantly gone up in value. But rule of thumb, we want to say assets minus liability, we want to get a positive number. The next one that we look at is then your cash flow statement. Your cash flow statement is going to tell us where is your money going. Now, all of these documents, obviously, as your accountant, I would draft your documents, and then now we are going through a discussion, and I'm saying to you, here's the cash flow statement. It's broken up into 3 sections. The first section is going to tell us this is the cash that we've generated from operations. So we received 100 Rand from our clients. We've paid out 75 Rand to our suppliers and creditors, etc., in order to secure this 100 Rand. That money is going to sit in the operations side of your cash flow statement. Then we go, and the second part of your cash flow statement is your financing activities. Your financing activities are going to be the earlier example that I made. You've gone and you have purchased a car on credit, and that 500,000 or however much it is going to then be showing on your financing activities, because what you have done is you have secured an asset, but you have not really put the money for that asset out up front. You're then going to pay it off over the period, however long that is. Then the last section before the closing of the cash flow statement is going to be your investing activities. So your investing activities, where you're now getting your assets, where you're purchasing your assets. So if you would have provided 20,000 Rand to the business, then you go and you buy a laptop for 15,000 Rand, I'm going to see that 15,000 Rand in your investing activities. So your investing activities are the activities that we are expecting to take you through more than one financial year. Unlike your operations we measure every single year. They've got their own operations. Then before you close off your cash flow statement, it's going to show you the net movement. It's going to say at the beginning of whatever period you're looking at, this was the cash in the bank. And then this is then the movement from the operations, financing, investing, whether it's positive or negative. And then it's going to say, this is then the amount of cash that we have at the end of that period. Okay, so with all of these elements of the financial statements, it's important for you to understand, and it is very, very, very difficult to understand these numbers if you do not have real-time reporting. Real-time reporting enables proactive decision-making. This is what we want to see you doing. We don't want you to wait for the end of the year, 3 months after year end. Now we've got your financial statements and we're saying, let's look at them. It is late. It's about 15 months late. We want to look at your numbers as and when they happen. At the very least, every single month, we need to know what is the status of your numbers. Now, what real-time reporting refers to is that as and when transactions are happening, there is some sort of a summary that you can look at and say, how is my business doing? It will not be good enough to say, I know that I've sold 100 Rand worth of goods, but I can't show it to you. You must be able to show it to me, right? And we'll go through how we do that a bit later. Okay, so we've got our second poll now. And in the second poll, what we want to look at is what you believe to be the most critical financial metric in your business. First option being revenue, meaning the 100 Rand, profit being the 25 Rand profit that you would have made, or is it the cash flow, which is then going to tell me this was the money at the beginning of the period, this was the money or rather, this is the movement from the activities, and then this is the money at the end of the period. If I may please just have your votes. The poll has been sent and it's on your screen. Okay. I do have a few responses. And when you're looking at the responses, it's saying that your cash flow is the most important. I've got 83% sitting at cash flow, and then profit at 17%. Okay. Dinyeko, are you ready to take over? I'm just going to hand over to Dinyeko, whom I introduced to you earlier.
All right. Good morning. Can you hear me, Putana?
Yeah.
All right. Good morning, everyone. I'll continue. So having looked at the poll results, you have indicated, I think, overwhelmingly so, that cash flow is one of the most challenging areas for your business. And I think having looked at what Putanang presented earlier in terms of the balance sheet and the income statement, we then go to the second pillar of your financial success, being your cash flow management. We did indicate that there are 3 pillars to our financial management, one of them being understanding your numbers, what Putanang just took you through. And now we're moving on to looking at our cash flows and how we manage our creditors. And thereafter, we'll look at the third pillar. Before I proceed, I just want to perhaps just engage a little bit in terms of why do we focus on cash flow? Why cash flow is so important in ensuring that you are financially viable and financially stable, right? You might be asking yourself, is it not good enough for me to look at my bank statement? I've got a bank statement that tells me exactly how much money I have in the business, Why do I need to complicate my life further by including a cash flow statement? Putanang has already pointed a bit earlier on that your cash flow statement indicates to you how your money is being utilized. So when you look at the cash flow statement, you look at how the money is going, where it is going to, and when it is going. The timing of the cash flows is very important. It's one thing for me to have money coming in, but it's equally important for me to know when that money is coming in and how it's going to be utilized. So when you look at the cash flow, we'll be looking at what money is coming in and how it's going to be utilized. Equally important, you might ask yourself, why do we want to focus on creditors? We mentioned cash flow, one aspect, but the other aspect is that's equally important is the creditors. In the balance sheet that Sarang spoke about earlier, she mentioned that we'll be looking at our assets and our liabilities, which will give us our equity. Now, in terms of creditors, it's very, very important for us to actually categorize our creditors and know who do I need to pay so I can correctly budget for them and correctly account for them. Now, in terms of my creditors, I just want to group them into different categories. We've got creditors that are non-negotiables. So these are your statutory creditors. These are creditors that you just cannot, as a business, run away from. You have to actually engage with them. So we've got one set, your statutory creditors. Then from there on, we can move on to your trading creditors, the ones that you engage with, your suppliers, and so forth. You've got your funders, your financiers, also creditors. You borrow money from them, you need to pay back the money. So it's important for us to know each and every single person that we owe. The last aspect of my creditors would be my unknowns. So these are your unplanned creditors. So you don't always budget for them, you don't always know about them, but you have to cater for them somehow. So this could be, for example, what we call in accounting, your provisions and your contingent liabilities. Your provisions would be creditors that you are aware you've got a debt. You don't know how much it may be, and you don't know when it's going to occur. So it's important for you when you are managing your cash flow to also cater for those unknowns and also cater for what we call contingent liabilities. This could be any other creditors that may come as a result of you might get sued. You don't know if you're going to win the suit or not. So it's important for you to cater for those and be aware of all of your creditors. So when you are managing your cash flow, it's important to do a full scan of any liabilities, including potential liabilities. We often forget the potential liabilities. All right. Looking at the reality of finances. Putalang took you through turnover, revenue, and the income statement. Turnover is very important. It's a critical measure for financial success. You need to know how much money, how much sales am I generating as a business. That's very important. Without sales, you don't have a business. If there are no sales, there is no business. So it's important for us to measure our turnover. However, it is not the fundamental measure of a successful business. Vanity, it says turnover equals vanity. It's good to know how much money I'm making, but where does it go? How do I spend it? Profit tells me how much money I'm actually making because it tells me I've generated so much turnover and now I've made so much sales and I've reduced my expenses and this is the net result of my turnover. However, very, very critical. It's one thing to have the sanity of profit, but equally important or even more critical is the cash flow. It does not help for me to have a profit that I cannot collect. Cash flow is the reality. Am I collecting the monies that I have generated? Am I able to settle my liabilities as they come due? Because all of these things are interlinked. The Companies Act and other statutes require you to prepare financial statements. They also require you to also comply with your obligations, including your financial obligations, like paying your creditors in time. All right, when you look at how we go about managing our cash flow, and again, creditors, very, very critical. Do not forget the creditors. We often focus on generating sales. It's brilliant. That's great. That's where the business starts. We focus on generating the sales. You want the sales in. Equally important is managing where that money goes to. Right. So we'll go through some practical tips on how to manage your cash flow and how to manage your creditors. I've split them up between the cash flow management as well as the creditors management. In terms of the cash flow management, couple of tips. Invoicing. Every business starts with a sale, right? So there we go. Invoicing on time must be done. You must invoice on time. Equally important, the follow-ups. Once you've sent an invoice, it's important for you to make sure that you're following up and that you collect on that invoice. Separating your business and personal finances. Business is business, personal is personal. You cannot you cannot interchange, you cannot use the bank accounts and the finances interchangeably. Putanang mentioned earlier on mismanagement being one of the challenges that is found amongst SMMEs. And this is part of mismanagement. Mixing up personal businesses, personal finances as well as business finances is part of mismanagement. So you have to separate the two. You have to cater for yourself as a business owner to say, how do I cater for my needs? Do I then need to make a salary drawing? Do I need to take a dividend out of the business? What do I need to do? Those things need to be factored in so that you are able to also live off the business that you have started. Now, managing your operational costs efficiently, very, very important. Earlier on in one of the challenges, we mentioned automation and the cost for small business. It's a challenge for small businesses to actually get automation has been proven to actually increase operational efficiency. So if you're able to get automation in your business, it does make the business flow a bit better. Optimal. Now, when you're looking at the cash flow forecast or projection, that's actually the whole point of determining or adopting a cash flow statement, a projection, or to forecast and say, in 3 months' time, in 2 months' time, where will the business be? How much money will I have generated? Who do I need to pay? And do I have the actual funds to be able to cover all of my obligations? That's the critical part of doing the cash flow projections. Now, the next part we're looking at is incentivizing customers for early payment. You might ask yourself, why should I give my customer a discount for early settlement? Give you a practical example. You might give your customers 2.5%, 3%, it doesn't matter how much you give them, but you probably would not give them a massive discount. You give them a discount that's sufficient enough for you to actually still operate and still make a profit. Right. So you give a customer 3% off of their sales, say, I'll knock off 3% if you settle within the same day or within a particular period. Looking at obligations you need to settle. If, for example, you do not settle your statutory obligations, I'll give an example, simple example with SARS. If you have VAT that is due, that you have collected, that needs to be paid over. Remember, when you invoice somebody, you're counting for VAT. That VAT needs to be paid over to SARS. If you don't pay that VAT, if you haven't collected the VAT, you cannot pay it over. Immediately, SARS will levy a 10% penalty. So you're sitting with a 10% penalty, which is more costly than giving a customer 2.5% or 3% of the invoice. So you just need to be able to consider and see which one is the bigger cost. So you would need to do a cost benefit analysis to say, should I continue not giving the clients a customer and penalize myself in the long run in terms of my obligations? Right. We spoke about automation, so please make use of automation if you can. Use automation. Automation. Can you go one back, please? Let's stay on the slide. Thank you. Use of automation, very, very critical. If you can use automation, please do so. And it doesn't have to be a system that you have bought or purchased. You can use your own tools internally. You can use Excel, you can use Outlook, you can use what is available within your business, but you're able to also manage and able to afford. The whole point of this is not to create an additional financial burden on you, it's to help you to manage your business. So look at ways of optimizing your business and if need be, engage people that know, engage people that have practiced, that have done. Look at how other companies are actually doing it as well. Ensure that you at least put in some sort of automation. All of us, we get very busy, we get distracted, we forget to do the basics at times. So it's important for us to use the reminders that are available. Also, look at non-paying customers. Putanang mentioned revenue, turnover, great. However, am I collecting? Come back over and over again to cash flow. Cash flow is critical. Ensure that if there are customers that are not paying, you find a mechanism of dealing with them, because every customer that you are servicing is a cost to the business. There is a cost associated with it. If they do not pay, you are carrying the cost. The cost will ultimately affect your cash flow management. Right. Now, if you look at creditors, if you look at creditors specifically,
Dinyuko, I
Like I
think we've
mentioned
got
earlier.
your network.
Can you hear me now?
I think so.
All right. Okay. You let me know if I cut off, but I don't
Yeah.
see it on my screen. Okay. Thanks, Kitana. All right. Looking at avoiding late fees and interest charges, as I've mentioned earlier, you need to do a cost benefit analysis and say, do I then give somebody a discount and collect the money so that I'm able to meet my obligations as well? Building strong supplier relationships and for financial flexibility, it's very, very important that your suppliers are on the same page as you. That if you do get to a point where you are financially challenged, they are also aware and you can make arrangements with them versus not having that relationship and the suppliers are not aware where your business is at. Statutory creditors must be prioritized. You must prioritize them. These are non-negotiables. These have got the power to either shut down your business or um, make your business basically struggle to operate in the future. So it's important for you to ensure that you manage your statutory creditors. All right, we can move on. The next one is a poll. In the poll, we just want to look at a couple of things. We'd like to understand from you, who does governance apply to in your understanding? Does governance apply to big business, the state? Does it apply to small businesses? Or does it apply to all businesses? Basically everyone. If you can just log in your poll answers for me, please. All right, I'll give it a bit of time. I can see there's some responses coming through. Okay. All right, so I'll proceed. Right, in terms of the responses, I've got 100% response that says governance applies to all businesses. We spoke about the 3 pillars of financial success. The first one was understanding your numbers. Just going back to a short little recap, just to show where we are at the moment. We're understanding our business numbers. We've gone through that. We managed our cash flows and our creditors. Very, very important for us to manage our cash flows as well as our creditors. The last part of financial success is staying compliant, ensuring that we are actually compliant in all respects. We can move on to the next slide. Thank you so much. Right. When you say staying compliant, what does that mean? What do we understand by that? I think majority of us, when we think of compliance, we panic at first. We ask ourselves, first of all, do I understand what compliance is? Do I have the finances, the costing? Because it does cost to comply. Do I have the budget to actually ensure that I comply? Equally so, what is the cost of non-compliance? If I don't comply, what then happens? And what is the impact of not complying? And we think of the complex regulatory environment. It's quite complex when you're not an expert in a particular field. One of the challenges that was listed by the SMMEs or the landscape survey that we did was actually the regulatory compliance. It is quite complex to comply with something that is not your expertise, that is not your field. So majority of us, we panic and we think, I don't know how to comply. I don't know where to start. And because of that, and non-compliances do compound. They do have compounding effect. You miss compliance with one aspect, but it impacts other areas. So it's very important for you to be able to comply and understand what compliance is and how compliance actually goes. Right. Now, we've said here the importance of compliance and governance. And earlier on, we spoke about governance, that who does governance apply to? I think majority of us, when we hear the word governance, we automatically think king, the king code. And majority of us will think it's not applicable to me as an SMME owner. I don't deal with the public. I'm not a GSA listed entity. I don't have a high public interest score. So therefore, I don't need to be compliant with governance. But what is actually governance? What is governance? It's important for us to understand. I think majority of us can probably understand what compliance is, but do we understand what governance actually is? Now, governance sounds very complicated. It sounds like something that only learned people should be able to understand, but actually it's not. It's a very simple process. And every single business owner, every single person does actually to some extent govern. We all govern our businesses, we all govern our affairs. So what governance is a set of rules, right? Rules, processes, practices by which your business is directed and controlled. It's very important that there must be rules, there must be processes, and there must be practices in place by which an entity is actually governed. So you need to actually draft your own policies that tell us exactly how your business works. So governance in a nutshell will look at who makes the decisions, who in the business makes what decision. We'll also look at accountability. Who is responsible for what? Who has made the decision? Who must now execute? One person makes a decision, the other person must execute. It will tell us the who is responsible for that. It will tell us transparency. How must this person do this? It must be clear. How must they do it? There must be clear communication. There must be openness in the business. Right. The last part of governance is integrity and ethics. It's very, very important that all the actions that we take as business owners are ethical and, and abide by the legal standards. You cannot take an unethical decision or an illegal decision as a business owner. We all have to adhere to the rules of the country. So it's very important for us to ensure that our businesses are run as ethically and as legally as they are required to. Right. So just a quick high level in terms of why governance and compliance is important. Is important. We now all are clear in terms of what is compliance and what is governance. Now, why is governance important? Governance is important and it matters because it builds trust. Builds trust. That on its own is key. You don't have a business if you can't be trusted. You need to be trusted for you to run a successful business. People need to trust that you will deliver what you say you will deliver at the time you say you will deliver. It's very important. It builds trust with customers, suppliers, funders, investors, regulators, and many more. The one aspect I want to touch on, which is quite critical, and this is your important stakeholder, is your employees. Right. Governance builds trust with our employees. Your employees are your ambassadors for your business. They are your most critical your most critical stakeholder. It's important for them to know that what happens in the business is what we say actually happens in the business. I may not have put them down there, they're not documented there, but they are very, very critical. Do not forget the employees, right? If employees are meant to be given particular benefits, let them have the benefits. If they're meant to be involved in particular processes, allow them to be involved. It builds that trust. They will then be able to go out in the business and market the business and deliver the way that you're expecting them to deliver. That's part of financial success. So everything in business works hand in hand. The second part is it ensures adherence to South African laws and governance frameworks. We all have to comply with the laws of the country. Right? It's very important for us to ensure we've got policies and procedures in place to ensure that compliance. The next part is it minimizes legal, financial, as well as reputational risks. It's very self-explanatory. None of us need to be financially. We don't need to be adding any financial burdens, any legal burdens, or any reputational burdens. Again, your reputation precedes you every time. So if the business is doing well, the business is known for doing good things, your reputation will go before you. The last part of why it's important is it ensures business sustainability and market competitiveness. Why? Why? Back to trust. If I can trust you, I will keep coming back to you. If I don't trust you, I will look for somebody else that I can trust. And that's why governance is so important. And that's why compliance and governance together are very, very important for your business. So please ensure that you are not neglecting the compliance and governance as part of financial sustainability. Oftentimes we think, I just need to prepare financial statements. You don't just need to prepare financial statements, you need to ensure you are compliant in all aspects of your business for financial success. Right. Right, so here we'll just look at high level, some of the key compliance areas within South Africa. So the first part there, I've mentioned regulatory compliance. I've mentioned earlier that we've got what we call statutory creditors, non-negotiables. Again, this is another non-negotiable. Regulatory compliances, all of us need to comply with it. Doesn't matter what you do, doesn't matter what industry you're in, there are certain laws that you just have to comply with because they are set for all businesses in South Africa. B Act won't necessarily apply to all businesses, but for those that it applies to, it's important. Companies Act, if you are a company, you must adhere to the Companies Act. You must comply with it. You must register. You must ensure that all of those things are in place that are required by the Companies Act. There is a whole act that governs the conduct of directors, that directs the conduct and the affairs of the business as well. You, as a business owner, cannot say, I was not aware of a particular section of the Companies Act. You cannot say that. You have to, by virtue of being a director of a company, you have to abide by the Companies Act. And as such, it's important for you to ensure that you are aware of what those rules are, you are aware of what the Act actually says, and ensure that you are compliant and adhering to the Companies Act. Tax laws, all of us need to for tax obligations unless you're a tax exempt entity. And even then, there are processes for you to apply for exemption. It is not necessarily automatic, right? So you need to ensure, have I followed the right procedures to actually ensure that I'm actually exempt from the particular taxes that I shouldn't be paying? Employment laws, all of us need to be adhering to the laws. Without employees, as I've mentioned earlier, the business will suffer. So you need to adhere to the employment laws. Industry-specific laws. Now, these are laws that you need to look at your own industry and say, what do I need to actually operate in my business? This will be linked to your underlying operating license, depending on the industry that you're in. Others may have an operating license, others it may just be a matter of certain compliance that are required, not necessarily a permit or a license being issued, but for you to be able to operate. And FICA, as we all know, we need to be compliant with that. The second part of our key compliance areas looks at financial compliance. And here we're looking, the first part was, am I registered? Am I registered? Am I compliant? Am I doing what the law actually says to me? The second part that we're looking at is SARS, CIPC. They've got financial implications. So the financial obligations that come with those particular laws, I need to ensure that I actually have got my ducks in a row, that I have paid SARS when I need to pay them on time, I've paid CIPC, I've paid everyone I need to pay within the particular times that have been allocated to me. Now, the next part is corporate governance. In the previous slide, we looked at what is governance, and put simply, it is sets, it's a set of rules that govern how your entity operates. Processes, policies, practices, they must be documented. They must be there. Ethical leadership, ensuring that you are practicing your values. Majority of us will do vision, mission, values. Those values need to be lived. They should not just be documented, they need to be lived on a day-to-day basis. That's corporate governance. Now, from a data protection and security, very, very important, POPIA Act. You cannot say that I could not comply with a particular law, particular rule, because I'm a small business. You know, some of the things apply to all of us. So we need to be internally compliant. If you access somebody's information and it's private information, ensure that you are protecting that information, ensure that your data is protected as a business owner, because you do have access to other people's information as well. Now, the last part of key compliance, it's one thing for me to be compliant, but how do I know that I'm actually compliant? How do I know when I need to be improving? Right. So you need to ensure that you are monitoring and reporting on a regular basis. I cannot improve what I don't know. I can't. If I'm not monitoring and reporting, I'm not able to actually say I need to do X, Y, Z and close this particular gaps. So very, very crucial that you actually are monitoring and reporting on a regular basis. Okay. Right. This basically summarizes majority of what we've discussed so far. Again, the key common governance and compliance challenges facing SMMEs in South Africa. And you will see that the governance and compliance challenges are very similar to the financial challenges. They all go hand in hand. Complex regulatory environment, we've spoken about that. There was a quote earlier on about tax challenges and how complex it can be. So it's very, very important for you to ensure that if you do not understand the environment, engage a person who understands the environment and seek that assistance. You cannot plead ignorance and say, I was not aware. Unfortunately, as a business owner, you have a responsibility, you have an obligation. Excessive red tape. Most of us know we try to apply for certain things. Challenges in terms of the administrative processes. Things take long. What one would expect to take in 3 weeks turns into 2-3 months. So those challenges do affect SMMEs. If you need a particular certificate to operate and you have not been able to get the certificate, you will be challenged in operating your business. Limited resources and expertise. As we've mentioned, we don't always have all the money in the world to be able to execute our business, to be able to execute our plans. However, we have to ensure that at least we find a way to manage the resources that we have and at least achieve the basic compliances in place. Data protection and cybersecurity risks. The world is ever changing. It's changing very, very fast. It's rapidly changing. AI is taking over. It's very important to ensure that we have a way of managing our data and cybersecurity risks. We cannot say we were not aware because we're a small business. It doesn't exempt you, doesn't absolve you from the responsibilities. Integration of governance, risk, and compliance. Majority of us, we put away governance, risk, and compliance because we say it is not for us. We are small businesses. It is for the bigger businesses. However, it is for all of us. We need to be compliant. Access to finance, again, was raised from the very beginning. It does affect my governance and compliance. If I'm not able to access finance, some of the things that I would like to do, I'm not able to do. So how do we ensure we've got access to finance? One of the challenges raised by the Banking Association was the access to funding for leadership skills and the cost of non-compliance. Right. Now, staying compliant, governance and internal controls, just a quick recap. Make sure that you keep compliance registers for every area of your business. Ensure that every aspect of your business is, you know what needs to be done in each and every single area. Look at review yourself. Look at the common mistakes, so to say. What is that normally gets us into trouble? How do we get to penalties? How do we end up with penalties and audits? So it's very important for us to have a clear set of rules. How do we do things? When do we do things? Who does the things? And who's accountable? And that we call internal controls because now you're putting together a system internally that can help you to manage your business. And as PSTM, we can help you to ensure that you are compliant to help your business grow. And the last part I'll just quickly touch on is in terms of how to identify which statutes to actually comply with. We can go back to the other slide. How to identify which statutes. Next slide, please. Thank you. Right. This part basically, you as a business owner must ask yourself, what can I as a business owner do? That's step one. One, understand your environment. It's very important for you to understand what environment are you operating in. Once you've identified that, then you need to have a list of all these statutes you need to comply with. Once you've got that, implement your internal controls. Make sure that there are processes internally that can assist you to be compliant. Document them, automate them, practice procedures. Regularly review your controls if they're not working anymore. Change them up and ensure that you can have procedures that actually address the challenges that you've identified. Compliance monitoring and reporting, as I've said before, if you don't know what you are, if you don't know where the gaps are, if you're not reviewing, you won't be able to close the gaps. Right. Employee training and ethical culture is very, very important. Employees play a very critical part in our businesses. They need to be trained. We need to train them, and training needs to happen continuously so and ensure that we actually are advancing a high ethical culture. Continuous monitoring and improvement. Let's ensure that this happens continuously. It should not be a once-off, it should be a continuous process. And lastly, very, very important, none of us are experts in any field, in every field. So it's important to engage a trusted advisor. If your skill is not finance, engage a financial advisor. If your skill is not compliance, engage a compliance consultant. It's very, very important. All of us do need that in our business. Right. As a quick recap, we looked at the three pillars, being understanding your numbers, managing your cash flow, and the last part, looking at staying compliant, which is governance. Quick recap in terms of that, we said you need to be able to keep up to date and accurate records. Putanang spoke about the importance of real-time reporting. She said,
I think it's the network again, Tinyiko. Okay, let me carry on. Right, so I think we were just recapping. So business best practices and what we highly recommend that you invest in as the business owner is to make sure that you're keeping accurate and up-to-date records, that you invest in financial reporting tools as well as automation, that you work with trusted financial advisors in different areas, and that you understand the value of monthly management accounts, which includes your compliance element part of it. Those go back to those different elements of the financial statements, the reporting that we spoke of, and that is your income statement, your balance sheet, as well as your cash flow statements. But most of all, most important, make sure that you've got continuous review, analysis, and monitoring. We make decisions today. It's the 29th of April. By the 31st of May, most of the time we know that that decision that we made is not working. It's time for me to tweak that decision, or it's time for me to make a completely different decision because I'm running a business here. And part of getting your trusted financial advisors is for that decision support, where you can say, this is what I'm thinking. What are you thinking? I've tried this, I've tried that, I've employed this person, I've done this, I've done that. And some of these things, of course, are not our area of expertise. We may be able to then recommend you to somebody else who can assist, that we ourselves would also trust.
Thanks,
Okay.
Putanang.
Okay.
Thanks, Putanang. I'm back. Thank you for that. We can move to the next slide. I think perhaps just in closing from my side, thank you so much, everyone, for joining in today. But also, I'd like to encourage each of you. We've tried high level just to look at the three pillars. If you can take away anything from this, remember there are three pillars to financial success. I must know my numbers, I must manage my cash flow, and I must stay compliant, and I must prioritize compliance and governance as well. Right. So maybe something just to for each and every single one, as you go back today to your businesses, please go back and review your financial reporting and compliance. Just go in and assess, what is my compliance status? What is my financial reporting status? And if it's not in a favorable position, set up a meeting with an advisor, with a trusted advisor. We can assist you and start to track your numbers. It's very important that you know where your business is. We've listed our services. There's PSTM. We do have full outsourced finance function. We do have statistics and compliance advisory. We do look at internal controls and governance. We also do monthly health check-ins. We've got a section called wealth management. This, as Putanang has mentioned, if we do not have the expertise internally, we do partner with other partners. So we do have a wealth management section, which we have partnered up with a company called Anchor, and they then look at the wealth management aspect, because as a business owner, it's important for you to also manage the wealth that you actually are generating. So in closing, and before I hand back to Putanang, I just want to leave you with a quote. There is a quote from a management consultant called Peter Drucker, and he says, only what gets measured gets managed. And the whole point of this is to manage your finances, to be able to financially, to be able to say, I've got my financial management in check. Thank you so much. Putanang, I'm handing back to you.
Okay, thank you. What we hope you take away from that is to understand that your numbers do tell a story, and we want you to be in charge of the story that your business numbers are telling. We understand you've got a vision in your head. how do we make sure that that vision is translated into the numbers that your business, your numbers are telling for your business? Okay. So I don't see any questions in the chat or in the Q&A. So I'm just going to then request Lee, if you can come on. Lee is a colleague of ours from Zero. Zero is the system that we make use of at PSTM. And this is largely because it enables us to have that real-time reporting that we were speaking about earlier. It allows you as the business owner to also have access. One thing that we definitely advocate for is that you as the business owner must have access to your numbers. You cannot say, I'm waiting for my accountant to send me the management numbers. If you need to know at any point in time how much you've paid for salaries this year so far, that information should be available at your fingertips. If you want to send your accountant an email or a WhatsApp, it should be because it's an option, not because you really don't have access to that information. All right, Lee, are you ready? Lee?
There we go. There we go. Not too sure what happened previously, but I am here. I am here. I think Gavin might be having the same issue as I am, but no. So,
Okay.
because I couldn't even chat. But anyway, ladies and gentlemen, we are on a tight schedule. Let me share this. And there we go. Can you see my screen?
Yes, we can.
Perfect. And then Gavin, on your side, can you unmute yourself as well?
Yes, can everyone hear me?
Perfect.
Fantastic.
Yes, we can.
So thank you, everyone. We know after public holiday, today might feel like a blue Tuesday, but we're glad that everyone's here. What we'll be talking about today is Zero, where we fit in and the accounting software. For those that don't know, I'm Lee Bailey. I'm part of the partner consulting team. I work alongside my colleague, Gavin Lumu, who will introduce himself now. But just about me, I've been in practice for 3.5 years. I am cyber qualified. I'm just short of 3 years at the company now. Presented at a bunch of our events, and also I've worked with many exciting partners and business owners to help them get the best out of their business. Gavin, over to you.
Thank you very much for that introduction, Lee. So my name's Gavin Lumu. I've been with Zero for just under a year, and I look after PSTM as their account manager. Also, just to add on, I've come from a banking background and understand the importance of having or partnering up with the right trusted financial advisor. But yeah, looking forward to showing you some insights around Zero and what it has to offer for you guys as a client.
So what we'll be covering today is just what is Zero and why Zero. Please pay attention, it's Zero with an X off of the Z, and we're not Xerox. And then introducing Zero and solution overview. I'll be going to product to show you what it also looks like firsthand, and then also the additional resources. So this is Zero, and then Gavin will be covering this.
Awesome. What is Zero? So Zero is a global business platform that provides accounting, payroll, and payments, as well as other solutions for small, medium businesses with accountants and bookkeepers top of mind. Yep, move on. Our purpose, and it's quite simple. It's to make life better for everyone. People in their small businesses, the advisors, and the communities around the world. Zero is based in over 90 countries with a key focus in the South African market, trying to grow small to medium businesses. So here we're asking why Zero, and I'd beg this question to ask you why not Zero. If you move on to the next slide, please, Lee. Now more than ever, clients yearn for human interaction. In every industry, AI is a big disruptor, and we need that hand-holding process whereby we are we're learning from their advisors for their services beyond just accounting, compliance, and bookkeeping. Accountants are needed to pivot by learning new skills and leveraging technology like Zero to offer a wide range of services outside of just your traditional accounting. Thanks, Lee. All right, so cloud accounting is the future. We want you to scale and grow your business with technology. Um, the first step is to becoming a digital first firm that makes that data and software accessible online, anywhere, anytime. In the case of cloud accounting, you keep your business books online, which is leveraging the main value from being a cloud business or a cloud accounting solution. This includes your records of income and expenses and assets and liabilities. The most important thing is that this information is encrypted. Much like your banks, so only the people who can log on are able to view the data. Running a business online has many advantages. Not only is it scalable, but there is a lot of automation, which helps you the ease of compliance, which you did mention earlier, as well as being able to integrate with other tools in your business. You can easily access it anytime, anywhere, like I mentioned earlier. Security and innovation, we are constantly updating our protocols in line with what global trends are. And last but not least, we want to help you improve and build strong relationships with your clients. So this now saves you time so that you can focus on building those relationships with them. Xero is a leader in cloud accounting, and we help thousands of businesses around the world better their businesses. Thanks, Steve.
So then I'll be covering now what it actually looks like. We'll be going straight into product. So for many of you, if this is the first time you're seeing it, or maybe let's just get some interaction from there. If you've seen Xero before, can you please put a 1 in the chat? If not, can you just post a 0? So let's just then see over there. Okay, so I've seen. Oh, cool, a lot is seen already. Perfect. So, and then there's also a couple of newbies. Okay, good mix, good mix. So this is here over here. Maybe some things to just mention before we go into product. It's available it's cloud-based. So even if you're on your phone, if you're on your laptop or PC, you can use Xero. It's not software you need to download per se. So there's no need for you to download and worry about those type of updates. There's unlimited users. So if you want your staff or employees to be on, maybe just on invoicing or capturing bills, there's no cost per user over there. You have up to 1 terabyte of cloud-based storage. That's a whole bunch of PDFs and Excels. And also our security, we on the level ISO 2007, which is that above of the banks. We take our online security very, very seriously. Your information only you can see. Myself and Gavin can't log in on the back end and see what's happening in the business over there. As soon as you mention anything cloud, I know there is a bit of that hesitancy. But yeah, so just on this, let's now go into product. So this is the company. Everyone has access through to their own demo company, which I'll be using in today's session. Just to echo of what has been mentioned already today, cash flow is very, very important, and we saw on the notes on the polls, understanding revenue and debt. That's a very, very key part of this. If you go through the business, so we already have a short-term cash flow tool within the software. So here you can see, based on what has been captured and projected, how well the company is going to be doing. You can see, hey, we need to up things here at the end of May. Otherwise, things are going to be a bit rough. You can also change this for 30 days, week in and week out. There is also additional sides to this. So we've also partnered now with Swift Analytics, which is another software within Xero, which allows you to have full reporting above and beyond just your invoices and bills. We also have the business snapshot, which is my favorite. The reason being it has more graphs. So here you can see exactly how well the company is doing. We mentioned profit or loss. You can see how profitable it's doing right now. You can see the efficiency of the company as well as those key ratios and expenses. Just to monitor again at one click. Let's go back to the dashboard. So over here, you can choose what you want to see. I do recommend the more info the better. So here, for example, the business bank account, I would like to see this. I've added some accounts on the watch list just to monitor. You can also include for free. There's a budget within Zero over here. The business savings, invoices owed, bills need to pay, and expense claims as well. So within Zero, there's also you can invoice directly out of it. It's not a situation where you have to now download the Excel, add it in manually. You can go through under business. You can either create a quote. So if you are using quotes, you can then select new here, make a new quote or a new invoice, depending entirely up to you. So let me just close in this over here. So what's nice is you can put through over the details of the contact. So whether it's a customer or supplier, Zero will work that out for you based on the transactions. There's some really cool hidden Easter eggs within the software as well. If I say plus 30, it will automatically add 30 days. The invoice number is automatically referenced. And another Easter egg. So I always say Zero is a magical company. And now you're going to be wondering, okay, Lee, what am I going to do with all the time I'm going to get back from these efficiencies? If you type in, I want a unicorn, blink and you might miss it. You'll see a magical unicorn run across. So within the software, there's a few gems like this. There's also how this comes about is through Zero support, which we'll cover towards the end. But just with the unicorn, how it came about is someone made a ticket wondering if the Zero support team follows the cases, if they really listen to the people. They saw this and they decided to give the unicorn. So nice hidden gem within the software as well. Also, as a business owner, if you have with let's say different services you provide on a regular basis, and you have some retainer clients or it's a set like item, you can click on the drop down here and it will pre-populate all this for you. So instead of manually typing out the description, the quantity, and the price, you can set this up to have the items available there for you. You can also always make adjustments. So if this was now, let's say 250, you can do so and it will automatically work that out for you over here. Don't worry too much on the tax rates. I know it's 8.75 and not 15.5 over here. Reason being is this is the global company, so just using the international rates. But the principle still stands the same. And then you can approve an email directly from here. So you don't even need to print this out and then email it. You can send it through with this template automatically available here for you. You can make edits through to this, but it gives a nice breakdown and it attaches the PDF as well. So let's just go through over there. You can then send the email through. Then I'll be, because it's too many to go through, but then I'll receive on my end what it will then look like. All right. Also, what's nice is if it's a recurring invoice, you can also go through and copy the email or copy the invoice. So instead of doing this again, and go through that whole process, I can say copy and the date and invoice number will update automatically. Also, when it comes through to debt management, we've also included now, it's called invoice reminders. So it's a really nice feature that's within the software. Simply go through to your invoice settings over here, and I can put on invoice reminders. So instead of you now having to follow up with your customers on, listen, this needs to be paid now, you can have the software do the heavy lifting for you. So I can say either email if it's 7 days overdue, or I can be proactive and say no, due in 7 days time. This way they then know that they will have to pay. And also this isn't included for all your clients. You can decide which clients you want to include onto the invoice reminders. Then on the contacts, so that's just the business we covered here. Bills needed to pay. I'm mindful of the time. We also have what's called HubDoc. And maybe let me go through the slides over here to show you what's HubDoc. So we know with our clients and partners and business owners, everyone is having the issues of, let's say, getting the invoicing on the cash flow side of things, but also when it comes through to compliance, it's very important to keep the original documents. So SARS will ask for a valid tax invoice, for example, with your VAT, and what HubDoc allows is it's a document hub where it stores all the supplier invoices for you. This one has unlimited storage. You simply take a picture of, let's say you're out on the road or you're busy entertaining a potential client. You take a picture of the slip on the app. It will then send it through to HubDoc, and then the accountant can do the rest. There's no additional cost with HubDoc. This is completely free with your Xero. Also, if you're not there for the app and you prefer to email, you can definitely do so by emailing it through to HubDoc. And then there's also the manual drag and drop. What this then does is, and what HubDoc does is, it's cloud-based, reduces human error. So through the machine learning, it picks up the invoice date, the number, the amount, tax, etc. Like I mentioned, unlimited storage. It's again complete automation, so no manually having to drag and drop, no missing data, and then the real powers in the saving of the time. So here the vision is zero data, and that's with a Z, zero data entry. So again, instead of chasing documents, automate, and then it's on the cloud, always available. So just how the flow will work, again, just to recap, you take a picture of it, we'll then send it through to the cloud. From it will auto extract. I'll then publish within Xero, and then all I have to do is one-click reconciliation. So what this will practically look like, just going through to my Xero over here. So just going to my company, which is obviously a great company. I have, let's Bemba Motors. So if I go through here to Bemba Motors, let's share this tab. Here we go. So you have uploaded this invoice. You can see the slip came through. It's all through the document over here. And what's fantastic about this is you can see it came through system generated through the API from HubDoc. So I can go through, and if need be, I need the supporting doc for the SARS audit, go through from here and then download the file. Then just in closing, I believe we covered quite a bit over here. Just to show you that maybe let's just show with this ecosystem, there's a whole bunch that comes with Xero. So we've mentioned now like the bank feeds, where I didn't even mention that. So bank feeds is basically where the data gets pulled through from the bank straight into your Xero, very, very secure. We work with the bank, so our security must be up to date with theirs. HubDoc, like I mentioned now, with the supporting docs, so that you don't need to worry about the SARS audit. Also, just for keeping compliant. In Xero itself, we got all the processing power and all those good things I've showed you over there, even a few unicorns, report templates. So this is then more for the accountant that they understand. But basically, because Xero's open API, all this, even if you build your own app, you can plug into Xero. So even if you don't want to invoice at the Xero directly, for argument's sake, you can invoice from your app, let it send through onto Xero itself. And that way, we're again reducing that manual human error and just speeding up automation. And then just in closing, just want to mention the educational resources we have available through to you. We have a dedicated 24/7 team. With the perks of working with a global company is there's always someone available. We use the follow the sun model, so you have access through free 24/7 support. And then just over here you got Xero support. I mentioned follow the sun model, and then best in class technology. I think maybe then in closing, is there any questions on Xero?
Okay, Lottie, there is another question that you had typed into the chat earlier. Okay, but maybe let's do the Xero one first. Lee. So his question is, he always experiences a difference between bank statement on Xero and the actual bank balance. So I think this would be just a timing difference where it hasn't downloaded certain transactions as yet.
So there is a bit of that, and then also there can be unreconciled transactions added manually. Like here, I can see it's imported. These two are on, so this means it was manually added. The report you'll use with this, Loti, is the reconciliation report. So when you click on this report, it will then show you if there's possible timing differences, like Putanang mentioned, or if there's any transactions which were added manually. So for
Yeah.
those, I don't want to go too into detail, but just remember they should only be unreconciled statement lines. If you see outstanding payments or outstanding receipts, these are normally manually added, and then these are the problem children over there. But
Yeah,
you
and
can
we normally for clients recommend that we don't do any manual entries because then we don't have this complication. Then we don't need to keep checking this. So if you are our client, what we do is we download that statement and then we do allocate to the different accounts. But if there are manual entries and we do come across that every now and then obviously we then need to go in and sort them out. But generally, we shouldn't have them.
Yeah.
And then
But
sorry, Lee.
no, I was just going to say it's very easy to also fix so that you don't need to worry about that load. It's just options, remove, and redo.
Okay.
And then that will solve that issue over there. And then also just in closing then from our side, thank you again, Putanang and Diniko, for the opportunity for this presentation and for putting this all together. We know the amount of work it takes to get business owners together. We also learned a lot in this meeting, the amount of value and insights. We take it for granted that is the business being profitable or how's the liabilities looking like, but what does it really mean? So thank you again for shining the light on that.
Thank you. Okay, so Lottie also asked, making a sale is exciting, but how do you decide whether to make a sale to a non-paying customer or hold your inventory and hope to get a customer that will pay timeously? I think this is where the employment of trusted financial advisors come in, because when you start your business, you're very, very emotionally invested, and nobody can tell you otherwise. It's not possible to not be emotionally invested, and so it's always important to get that independent eye, somebody who can tell you the truth and say to you, it's not worth it. And it's better to hold off and sell to a paying client. And obviously, there's very, very many things that go into getting a sale. And one of which is marketing. Is what is your market position? Where are you marketing yourself? Who are you speaking to? Who knows about you, etc., etc. But it's better than selling to a non-paying customer, because that is a cost that you eventually will have to bear. You are going to then, if you're selling something to somebody for 10 Rand and it takes you 3 years to get that 10 Rand back, by that time, you've made a loss, really. You haven't really made any money from that sale. So I can say check your emotions, but I know it's very difficult to do that when you start a business. So get those independent people who can come in and say, worth it, not worth it. And I'm not talking about a formal structure like a board. That's what, those big companies do. They've got a board, they've got advisors, etc., on formal contract. But if you're working with us, for example, this is a simple conversation. If you show me your numbers, I look at your numbers, I'm going to be very honest with you. You tell me the situation of the customer. My default answer is probably going to be no, but if there's circumstances that are worth considering, we can certainly look at that. And then you can make your sale and wait for the payment if that's what we've decided. But I think let me then thank you all for attending our webinar. Please have a lookout for future webinars that we will hold. Please do send us your feedback on how this webinar was for you and if it was valuable, etc. And we would love to know. Also, get in touch with us. We would really love to work with you and serve you in your business and help you to make your business make you a wealthy individual, because I think that's why we all go into business. We all go into business to make money. We don't go into business to create a charity organization. I wish to thank you very much once again, and I wish you all a very, very good afternoon and enjoy the remaining holidays that we have. Thank you.